What's up, everybody? In today's video, we are going to go over how to master trend channels and trend lines when trading, and how to draw proper ones so you can fit price action the correct way, like the best traders use, and not get tripped up using inaccurate trend channels that will get you into a lot of trouble. So, first of all, the day started with a downtrend overnight, and just like here, we can see that on the right side of the screen, it is about 5:40, 6 a.m. Pacific time and 9 a.m. Eastern, so half an hour before the market opens. I don't have anything drawn at this point, and we see a downtrend. Some traders, some beginner traders might look at these two swings and think, okay, here's a trend channel, and it very may well be valid, but what is this really gonna help you out with? It's really not gonna help with much, because the only time it's gonna come into play is when prices uh, eventually do reach here, and we see that it really had no real effect onto our trading technique. So the first thing that we want to do is draw the most accurate trend lines that will fit nice and neat. See how this trend channel fits the bars very nicely. The other one, it only had a couple touches. This has several touches. So now the next thing that we need to know is, what are the rules for trend channels? And that is that a trend is over, or at least we expect a reversal or some congestion once there's a break and a new extreme. So in this case, we had a downtrend. We don't expect the downtrend to be over until there's a break, which we have right here, and a new low. So we have a break, new low, another test at a new low, and then a short-term uptrend. Now in this case, we really didn't get a break and a new extreme of this uptrend. So what that should signal to us is that maybe it's actually a shorter term trend, and we had a break and then a new high, and then another downtrend resumed. In my mind, what I'm always trying to do is I'm drawing trend channels to fit the price action, and to allow for the language of the charts to really present itself, because now we see that we have another downtrend, another break, and an extreme, followed by a reversal in the other direction. I could have drawn a trend channel something like this, where we have a break, a slight test at a new extreme before reversing, but we didn't reach these lows, signaling maybe my trend channel is incorrect. If we have something like this, it follows the price action rules more to a T. We have a break, one leg to a new low, another leg to a new low. Usually there are two legs until the trend is over or we start reversing, which we have here. Break, one leg to a new low, two legs to a new low, and then we had some congestion and we reversed. Now we see this uptrend. Once again, we could draw an uptrend like this, where we have a break, no new test and an extreme, so we don't really expect to reverse, and then we finally get an extreme way out here, but it's not as neat as it could be. What the price action is really telling us is that we had this downtrend, we had two legs to a new low, followed by congestion, which is expected, followed by a short-term uptrend, a break of that uptrend, a new high, signaling this uptrend is over, and then we reversed once again. Now, we see this short-term downtrend, a break, two legs to a new low once again, and what happened? We reversed, and what do? We draw our short-term trend once again. Now we have a break, a new high, signaling that uptrend is over, and what follows? A mini short-term downtrend. Break, new low of that downtrend. What happens? We start reversing again, as expected. We could even draw another uptrend like this, but as we see, that doesn't really fit as neat as it can. What really you might see on even shorter time frames compared to this is that there's a mini uptrend, break, new extreme, and this was just one leg up, another leg up like that before we had congestion, and then broke to the other side. Now, at this point, if you're live trading, you can see that there's a short-term uptrend and a break, and then a new extreme, signaling the uptrend might be over. However, once we touch the EMA, or at least get close to the EMA and push higher again, we can see that now if there's something that tells us, okay, there might be a more accurate trend, we can do that. But in this case, what we had first actually fits the price action more nicely. Why? That's because we see at the lows, or the bottom side of the trend channel, we have one touch here, we almost touch it there, and then we have another touch here. So that's one touch, two touches, which isn't much. And then on the upper side of the channel, we only have one touch. So what we really should draw is what we had originally, and that's this nice, neat trend channel, break, one leg up, another leg up, one leg up like that, another leg up, or it can really be one leg up like that, and then another leg up. We didn't quite reach it, but we nearly did, and then we reversed. But once again, we had a break, one leg here, another leg here, however you want to see it. All we're doing is drawing our trend channels to allow for the price action to be something that we can analyze and read like language, because these are trend rules that work for any market, crypto, forex, futures, whatever it may be, and it's just a universal language that traders like to follow. So now we have another downtrend, a break, and a new low, an attempt to reverse. Now, the rules with trend lines don't necessarily mean that once there's a break and a new low that we're going to reverse automatically. We can also just have a break, new low, attempt to reverse, or just have some congestion before continuing the trend, which we see we have here. And in this case, because we didn't reverse, now we can also look for another wider term channel, but once again, it really doesn't help much doing so. But we see that the trend really resumed here, even though it's not as neat as it can be, just because the bars aren't very, very nice and tidy. But we see that if we have something wide like this, it really doesn't make sense, because look how many bars are stacked here, and then on the downside we have more bars that are stacked. So we might even just have a trend channel like this, one leg down, another leg down, and then two more legs down. But at the end of the day, we're just doing what we want in terms of what can allow for the best way we can identify high probability setups. So regardless, we started reversing, so we know that in one way or another, this downtrend had a break and a new low, and we just want to find the accurate trend channels that will allow for these rules to show themselves on the chart. Now we have another reversal. Once again, we just have our short-term trend, a break, couple legs to a new high, and then we reverse. A lot of traders might try to draw something like this and keep going long after we already had a break and a new high, and they might go long right around here and get trapped because they thought, oh, wait a second, this trend channel is really like this. We have a break, we're expecting new high. Let me go long right at this bar. And that's where you can get into a lot of trouble, because what you should have done is draw your short-term trend, break, two legs to a new high. We see that this is just congestion here. This isn't the continuation of this uptrend. All it is congestion before reversing to the downside, starting a new trend. before we had a break, new extreme, and then reversed yet again. What do? We draw our trend channel, break, new extreme. What do we do then? We reverse. Now, in this case, because we have so many more legs to a new extreme, at this point, you can draw wide trend channels again just to show you how strong the downtrend is, but like I've stated multiple times, the short-term trend channels are where the setups are really going to present themselves. Because even though the wide channels do follow the same price action rules, the short-term ones are what is going to allow for the highest probability trades to show themselves and show you when you really should be going short and going long and when you should shift gears and start thinking about taking trades in the other direction. So after this downtrend, however it might be, something wide like that is probably accurate. So we see that we might have a micro break here, but regardless, we have a break and then congestion. It might even be something like this, where we just have a break and a lot of attempts to make a new extreme, which we ended up reaching only now, but we're in the overnight session now. But these trend rules work. We see that we had a break, a lot of attempts to try to reach this extreme. We ended the day not getting there, but eventually prices did reach there because the rules weren't followed. And traders saw that and said, okay, a lot of the smart traders are going to still try to reach this new extreme for whatever reason. And that's going to wrap up the video, guys. Once again, if you guys have any questions, have any comments, leave them down below. I'll be sure to answer them. Hope you guys have a good one. Peace out.